India inflation may additionally remain multiplied notwithstanding July dip. Analysts Mumbai India's headline retail inflation that eased for the one-third directly month in July is predicted to remain above the significant financial institutions' top tolerance range inside the near term, necessitating greater fee hikes in coming months, analysts said. High-frequency fee statistics suggest that headline inflation is probably to stay around July levels in August. We assume headline inflation to stay above 6% till February 2023, and middle CPI inflation to stay sticky at a coloration below 6% inside the remaining months of FY 2023, Nomura economists Sonal Varma and Orodeep Nandi stated in a Observe. India's purchaser inflation dipped to 6.71% in July, helped by using a slower boom in food and fuel expenses. The year-on-year figure, posted on August 12 via the National Statistics Office, became marginally decreased than the 6.78% forecast by way of economists in a ballot. However, it remained above the Imperative Bank's tolerance band for a seventh month in a row. The Reserve Bank of India aims to hold inflation at 4.00% inside the medium term, with a tolerance range of 200 basis factors on both sides. The outlook on food inflation nonetheless faces uncertainties given the choppy rainfall. For the primary 2 weeks of August, prices of vegetables, cereals, rice and wheat, and pulses are monitoring better. Rice sowing has been impacted via poor rainfall in key producer states, mentioned Gaura Sen Gupta, India economist at IDFC First Bank, Nasdaq, FRBA. Even as inflation eases, economists believe the RBI's Financial Coverage Committee will preserve to hike policy rates even though the quantum of such moves may also come down in comparison to the previous three movements. The MPC has raised key policy price with the aid of 140 basis points to 5.40%, considering that May's cost inflation maintains to stay a chief issue. The subsequent policy decision is due on September 30, with maximum marketplace contributors looking forward to every other hike. While Nomura and IDFC First Bank anticipate the RBI to hike repo charge by way of any other 60 bits per second to 6.00%, Barclays (LON, BARC) eyes another 50 bits per second rise in hobby prices over the subsequent conferences. Meanwhile, Nomura sees inflation to average 6.8% in this financial. IDFC First Bank sees it at 6.5%, below critical financial institutions' 6.7% prediction. We assume the RBI to deliver 25 bits per second fee hikes each on the September and December conferences, taking the repo rate to 5.90%. However, if international commodity expenditures retain to say no, we note the threat that the financial institution does now not increase quotes in December, Rahul Bajoria, leader India economist at Barclays stated.